In this segment of Money Talk Radio and the Ellis Martin Report, we speak with Gwen Preston, VP of Communications for West Red Lake Gold Mines, trading as WRLG on the TSX Venture Exchange and WRLGF in the U.S. on the OTCQB. West Red Lake Gold is a publicly traded gold company that is focused on developing its flagship Madsen Mine and exploring the associated 47 square kilometer highly prospective land package in the Red Lake Gold District of Ontario, Canada. The Madsen Mine produced 2 million ounces of gold historically from high-grade mineralization. A recent restart failed when an insufficient resource model and an undercapitalized build led to low mine gold grades and high cost. West Red Lake purchased the asset in early 2023 and has been addressing those deficiencies and plans to restart this high-grade and largely built gold mine this year. The highly productive Red Lake Gold District of Northwest Ontario, Canada, has yielded over 30 million ounces of gold from high-grade zones and hosts some of the world's richest gold deposits. Gwen Preston joined West Red Lake Gold after 16 years analyzing mineral projects and mining companies from an investor perspective. Through these research efforts, including hundreds of site visits, she attained extensive knowledge of exploration, development, and mining operations within the cyclical metals market. Ms. Preston started her career writing for the Northern Miner, where she covered exploration and mining stories around the globe. From 2014 to 2024, Gwen ran the Resource Maven newsletter business, reviewing stocks and explaining the rationale behind her investment decisions to her subscribers. I recently caught up with Gwen at the Prospectors and Developers Association of Canada, PDAC. Gwen, welcome back to the program. It's great to see you here in person at your booth at PDAC here in Toronto.
It's lovely to be here.
You've got some fantastic news. First, we can talk about this now. You closed a $10 million bought financing. Let's talk about that and the latest news with West Red Lake Gold Mine.
Absolutely. So, closed the financing. It was actually $20 million. It was announced as 12 and then upgraded to 20. That financing is really important. Starting up mines is complicated, and if something goes wrong, it can spiral quickly. As a management team, what we wanted to do was be prepared in case. People are wondering why we raised the money, and we wanted to be prepared in case. Things are going really well at the mine site. We are within weeks of the schedule that we expected to be on. Slight delays, but we're turning on the mill in a couple weeks. We're going to start putting the bulk sample through the mill. Consider those 12,000 tons the first tons of operating this mine. After that, we will build up a little bit more stockpile and then roll into campaign processing and be producing gold through the second half of this year. So it's all right there. So we raised a bit of money just in case, as the managing of the downside risk side of putting a mine into production. On the heels of that, we closed that. We feel really confident that money is going to give us options that we didn't have before, and options are really good. Makes us better defended against potentially opportunistic advances if somebody wanted to try and take us out. It gives us options if there's things that we want to buy. We're really confident that money is going to look really good in hindsight. I understand that investors didn't like it in the moment, but that's where management stands on that one. In terms of the news that we put out on the heels of that, those were drill results from South Austin and included over 100 grams per ton over more than 10 meters width. Within that, there was a 1,600 gram per ton hit. So the takeaway from that is that our geologic understanding is really working. If you look back, and I need to do a visualization in my presentation on this, if you look back at our initial South Austin drill results and then halfway through the time that we've been there, South Austin drill results, and now you'll see that our hits keep getting better. That's because the feedback cycle is working. We're understanding the system. That means we're able to target our drills better. That means we're able to hit more of those really high-grade nuggets. That's why people think of the need to do a lot of drilling in Red Lake as a downside, but really, when it enables you to know exactly where the zone is, it's the only way to unlock the really strong upside in these rocks. You're not going to hit 1,600 grams per ton unless you do the drilling, and if you do the drilling and understand where it is, then bam, that's what Red Lake will give you.
Excuse me, did I just hear 1,600 grams per ton?
You did, yeah, absolutely. It was in the drill results just last week, and Red Lake is Red Lake for a reason. People have pulled 30 million ounces of gold out of these rocks from an average grade over the last 100 years of 15 grams per ton. Average for the 100 years has been that high. That's why Red Lake is worth the effort, right? It's an effort to put this mine into production, but we're so close, and we're getting those kinds of results, and we're going to turn the mill on in the coming weeks so that we can process the bulk sample. We're almost there.
Is that 20 ounces per ton? 25 ounces per ton, 1,600 grams?
Yeah, it is. Yep.
I've never in my life heard those numbers.
Yeah, it is. Yeah, it is. Yeah.
I've never in my life heard those numbers.
It's a fantastic number. It's beautiful. It's a beautiful, beautiful piece of gold.
Number.
And it was really heartening even for us as management. Putting a mine into production is a slog. There's a lot of details. There's a lot of, right? It's a lot of work. But then you get those numbers and you're like, this is why we're here. This is why we're doing this. Red Lake is a phenomenal gold environment. And if we can get down, understand the system, do the drilling, put this mine into production, then we can leverage those beautiful rocks and sell gold into a market that is paying $4,100 Canadian per ounce for gold right now. $4,100 Canadian per ounce. We're also getting the benefit of the weak Canadian dollar. We will get that when we sell our gold. So we're very close to a very strong gold market and being able to sell into that.
When are we going to see that gap close between the equities and the commodities? We've talked about this before. You are insanely, it's my opinion, and I'm biased, and so are you, you're insanely undervalued.
That is the question. Here at the conference for our... So Shane, our president and CEO, he was just down at the Bank of Montreal conference that was in Florida last week. And the big takeaway from there was how much money the producers have. From the super majors to the majors to the mid-tiers, even the single asset operators have so much money because they've actually been really good about making sure they only operate assets that make sense. They haven't made crazy acquisitions, and the gold price has gone through the roof. So the question that leads to me is, what are they going to do with it all? I know they're getting a lot of pressure from shareholders to start increasing dividends. I think that's a great idea. If we can turn gold miners into a dividend play, and we can pull some more interest into our sector as a dividend play because we have the gold price to do it, let's bring more money into the arena. Let's increase the top of the funnel, and that will pull more money down the funnel to the rest of the equities.
Gwen, thanks so much for catching up with me today at PDAC.
I'm very glad that you decided to come down. It's lovely to see you.
I would just like to make one small correction, or shall I say one big correction in this segment. 1,600 grams per ton of gold is actually 56.44 ounces per ton of gold. I've been speaking with Gwen Preston, Vice President of Communications for West Red Lake Gold Mines, trading as WRLG on the TSX Venture Exchange and WRLGF in the U.S. on the OTCQB. This is Money Talk Radio and the Ellis Martin Report.